Institutional capital inflow into Bitcoin has been a pivotal driver of the cryptocurrency's recent surge. This influx of institutional funds is largely attributable to Bitcoin's inherent scarcity, making it an attractive asset for portfolio diversification and hedging against inflationary pressures. The recognition of Bitcoin as a legitimate investment asset by institutional investors marks a significant milestone in its journey towards mainstream adoption. One of the catalysts for this institutional interest has been the introduction of Bitcoin exchange-traded funds (ETFs). These financial products offer a regulated and accessible avenue for institutional investors to gain exposure to Bitcoin without the complexities associated with direct ownership and custody. The success of Bitcoin ETFs, surpassing thousands of competitors in their launch period and outperforming traditional ETFs, underscores the growing acceptance of Bitcoin within the financial industry. Furthermore, the media coverage surrounding the launch of Bitcoin ETFs has played a crucial role in raising awareness among mainstream investors. This heightened awareness has contributed to a broader acceptance of Bitcoin as a legitimate asset class, attracting additional capital from both retail and institutional investors alike. Renowned hedge fund manager Bill Ackman's expressed interest in Bitcoin further validates its potential as a lucrative investment opportunity. Acknowledging Bitcoin's ability to serve as a hedge against inflationary pressures, his endorsement adds credibility to the narrative of Bitcoin's role as a store of value in times of economic uncertainty. From a technical standpoint, current chart analysis indicates a bullish trend for Bitcoin, with strong support levels around $41,000. Breaking above the psychological barrier of $100,000 could trigger a parabolic move towards $200,000, supported by historical price action and market sentiment. In terms of investment strategy, the recommended approach for Bitcoin is to adopt a long-term accumulation and hold strategy, akin to holding a hedge fund. This strategy involves consistently acquiring Bitcoin over time and holding onto it for the long term, only selling when necessary to meet significant financial obligations. While critics often raise concerns about the environmental impact of Bitcoin mining, proponents argue that Bitcoin mining can actually lead to a reduction in overall electricity costs for consumers. Innovations in renewable energy sources and the increasing efficiency of mining operations are gradually mitigating these concerns, making Bitcoin mining a more sustainable and environmentally friendly process. Looking ahead, traders and analysts predict that Bitcoin's price could reach $200,000, based on historical patterns post-all-time highs. Key factors driving this prediction include sustained institutional adoption, favorable regulatory developments, and the upcoming Bitcoin halving event, which historically affects supply and demand dynamics. In conclusion, institutional capital inflow, the success of Bitcoin ETFs, increased media coverage and awareness, support from prominent figures like Bill Ackman, bullish technical analysis, and a long-term investment strategy all contribute to the bullish outlook for Bitcoin. Regulatory clarity provided by Bitcoin ETFs serves as a crucial on-ramp for institutional money, bridging the gap between traditional finance and the crypto market. With these factors in mind, Bitcoin remains poised for further growth and adoption in the coming years. Please go ahead by liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.